This small cap stock just won a major contract and its shares are up 800%. RCAT Holdings is a drone technology company that recently announced a partnership with the US Army, beating out 37 rivals. It seems the Army has placed an order for RCAT's Black Widow drone product. At the latest price, RCAT Holdings has a market valuation of $613 million and an enterprise value of $605 million. The company has reported only $19 million of revenue over the last 12 months, with negative net income and negative free cash flow. But what's important is what RCAT can produce in the future, not the past. And the bull case for RCAT Holdings was best summed up in the company's recent shareholder call. CEO Jeffrey Thompson said that RCAT expects $50 to $55 million in revenue next year, plus another $79 million from the US Army contract. That puts next year's revenue around $120 million, which puts RCAT's valuation at about 5 times next year's sales. And that looks cheap considering peers like Skydio trade at 22 times revenue, Anduril trades at 28 times revenue, and Shield AI at 18 times revenue. Crucially, RCAT's contract win proves the product's value and paves the way for more orders and more customers down the road. Future customers could come from other US departments like the US Navy or other NATO states like Germany or France. The Economist reported last week that nearly every country in Europe is increasing its defense spending in the wake of the Ukraine war, and drone warfare unfortunately is the new front line. CEO Thompson also mentioned that the US Army order for 12,000 drones was on the small side, especially when you consider that Ukraine is losing at least 10,000 drones a month on the battlefield. So RCAT stock has the potential to grow into its high valuation. As fund manager Kevin Mack wrote on Twitter recently, give RCAT 300 to 500 million of revenues with an EBITDA margin of 15% in a few years' time, and the company should easily be worth $1.5 billion plus. Even so, there are risks for investors to consider. RCAT now needs to ramp production so that it can fulfill orders while maintaining high standards of quality. That will require capital and strong management. If RCAT fails to execute, it could lose its contract and the stock would collapse. Alternatively, RCAT's competitors could regroup, throw money at the problem and come up with something better. And it's not yet clear how profitable RCAT will be in the future. So there are some real risks here, but RCAT clearly has a strong product and continued positive news flow should support the valuation. That's why I rate this stock a high risk buy, but these are my personal opinions, not financial advice, and I do own shares in RCAT Holdings. Thank you for watching.